All right, trade pros, good morning. Welcome to our morning market update for Friday. It's Friday, guys. October 19th of 2018. This is George Papazov, Trade Pro Academy. Look who's in today. Victorio made it. Victorio, how are your exams? Yeah, he probably failed them all. If I was a betting man. Victorio's back. Marky's in the same old corner doing the same old stuff. Yeah, we're here for you guys today. We're going to talk about a few things this morning, some key earnings that came out. We're also going to, oh no, this format sucks. We're also going to talk about China. All right, they just had a GDP number show up, and it was the slowest in a long time. And I'm going to tell you how that could impact markets globally. All right, so let's get started. We do have quite a bit to cover. First and foremost, some key earnings from yesterday and this morning. American Express up 1% on card member spending. So we saw an increase of the dollar amount and number of transactions for American Express. And that's a good number, and that starts to kind of get us thinking about the holiday season. Will that momentum continue through the holiday season? And if so, are we going to have a rebound led on the usual Christmas rally? That is a thing. We'll talk about that as we get closer to that on the calendar. Also, PayPal up 7.6% after hours yesterday, beating estimates and growth in Venmo and their payment services. So PayPal's done really well, up 7.6%. This is an opportunity for a stock to really catch a bid. And we're going to look at the markets. If these markets start to rebound today and close a nice bullish way on Friday, PayPal might be a good play on a dip down. Don't just buy the top. See a little bit of a sell-off, see that gap, that the opening gap fade, and then see where there's some volume and support, and that could be a good long opportunity. It is Friday, however, and I'm always very cautious about putting on new positions over a weekend. Opening new positions on a Friday tends to not be a good idea. Day trading is great. Closing swing trades is awesome. If you have a winner you want to hold over the weekend, okay. But getting in on a Friday, tricky for me usually because there's 2 days of potential volatility that you won't be able to do anything during. All right. Philip Morris, cigarette company, up 3.5% on market share gains. I don't know who smokes these days, knowing the outcomes. But, I got to say, I occasionally dabble too. Procter & Gamble reports Q1 $1.12 earning per share versus $1.10 expected. Revenue 16.7 billion versus 16.6 expected, and their fiscal 19 guidance is 2 to 3% gains across the board. So they're pretty bullish release. All right, let's go through the global markets. In Asia, Japan's down 0.6%. Hong Kong's up 0.4. China's up 2.6%. Pretty strong rebound out of China. So the title of today's YouTube is Chinese stocks were down 30%. They've since recovered. Now we're at about 24% down for the year. But Chinese stock markets are in a bear market. A drop of 20% or more is what classifies a bear market, all right, in equities. So Chinese markets, obviously, they're feeling the pressure of the trade war tensions. Also, their devalued yuan. Yes, it helps them export more, but it's less attractive for investment. So there's some outflow of capital. China has been doing a lot of things. They've been trying to infuse liquidity back into the banks in order to kind of show confidence and come to the rescue of the everyday investor. Let's just call it what it is. They're backstopping this drop. It's on the side of China, they have something called the national team. And what the national team is tasked to do is buy equities in times of massive slumps in order to kind of slow down the sell-off. All right, it's the same thing as the plunge protection team in the United States, which does exist. People laugh. They think it's this hypothetical thing, but it does exist. There is a government institution, organization that comes out on the open market and buys securities when the drops get ahead of themselves. All right, so is that a free market? No. Does it happen? Yes, absolutely. China, nice little rebound on a Friday. We do think this could be a dead cat bounce. What is a dead cat bounce? If you guys don't know, it's a term. It's actually an official term in the markets. They say even a dead cat fall, or even a cat jumping off a balcony will bounce when it hits the ground. Kind of graphic, but that's what it's called. So dead cat bounce, dead cat rally. We think that this Friday rally is a relief rally into the end of the week, and next week Chinese markets will probably continue lower. The prospects for them getting bullish now, there's really nothing there. It had to, markets ebb and they flow. They go down and up, down and up. So it's an up cycle. China's got the potential to kind of destabilize this entire global rally. And you guys need to know that. Follow these Chinese stocks because they're a massive provider of consumer goods, and the United States consumes massively. And so that trade relationship needs to hold in order for you to continue to pay the prices you've been paying on the goods that you like, and especially going into a holiday season. All right, so there is that. In Europe at midday, London's flat. Paris is down 1%, almost. Frankfurt's down 0.3%. We're seeing a little bit of bearish momentum in the London markets. However, in the United States, we're seeing a little bit of a positive sentiment this morning, with the Dow and S&P up 0.2% and NASDAQ up 0.4%. I get the feel that today is going to be a relief rally day in the U.S. as well. I get a feel that we're going to rally. All right, look to buy the dips in today's session. Obviously, if we swipe out the lows, you got to start selling rallies and go to the downside. Yesterday, when we left the trading room, I told our team that sell rallies. This thing looks bearish, and they had a great opportunity to catch multiple points. One of our team members had a record day where he made the most amount of money that one day than ever before in a single day. So we celebrated some good wins in yesterday's trading room. Today, we're going to do it again. Today, I think we get a little bit more of a bullish bias. Crude oil is up 0.7%. Gold's flat. Bitcoin's flat as well. On the economic calendar at 10 a.m., you got existing home sales, and you got a whole bunch of Fed speakers on the wire today. 12 p.m., Fed's Bostic talks about the economic outlook. 12:45, Fed's Kaplan speaks. And at 1 p.m., we have the important Baker Hughes rig count, which impacts oil. It's production numbers out of the U.S. It's going to impact the oil market. Now let's talk about China very briefly once more. China's GDP slowed to 6.5%. It's pretty nuts to hear that statement. It slowed down to 6.5%. That's amazing GDP numbers in any other country, but because China's grown so much on the back of their surpluses, it's kind of a 6.5% a slowdown. It's the lowest number since the first quarter of 2009. So it's not just a stock market thing, because sometimes you see a stock market and it's down. It's like, you know what? Stocks are not the economy. The stock market is not the economic outlook. It's a reflection of it. It's one small piece, but there's so much more that goes behind the scenes. The stock market's kind of the fair valuation of what we have today, but not always. It sometimes deviates from that as well. Since 2009, the economy and the market are two whole separate things, and they move separately with their own cycles. So 6.5%, now it's a confirmation in their GDP. It's one of the biggest measures of economic strength. That's not good for China. All right. Obviously, weakness in the GDP figures attributed to higher costs for their exports, and their yuan's been devalued, which offsets some of that, but not enough. China's feeling the pressure here. They're feeling the pinch. Here's the thing that is interesting about this, and I'm going to talk about China again because that's what we titled it, and then we're going to end this webinar. We often hear that China's got this big surplus, and again, I wrote a really good article. It's coming out on Monday at 7 a.m. You guys are going to want to read this. It's going to shed a lot of light to this trade war with China scenario and why it's actually bad for the United States. It's just as bad for the U.S. as China, and yes, there needs to be a renegotiation, but the way we're going about it is going to cause some market selling eventually, and it's coming down to that. It's like a roller coaster. You know, you're going up and you're click, 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 and you're rounding out at the top, and then suddenly you're in free fall. We've only got a couple of clicks left, guys, before we round out at the top. I'm telling you the truth. Here's why. China's been pressured to supply all these goods for cheap to the global economy. That's what they've done. Now, when they've taken the profit, they've reinvested it back into treasuries. However, for China to become a net importer of goods, they're going to have to get their middle class to grow. In China, the top 1% is way wealthier as an average to the middle income person than it is in the US. There's a very big saturation, and the middle point or the middle class is far worse off in traditional measures than it is in the United States. So in order for them to be consumers, they've got to build out their economy. So this is what they're doing with that surplus. The surplus gets put into use. They build out their economy. Their consumption level starts to go up. Now they need luxury goods, right? Now they start importing what U.S. makes. And through a growth of economic development in China, that creates a demand for imports from the U.S., and the surplus and budget balances out. That's that was the idea behind the trade deal between the U.S. and China. China grows, they're going to become a consumer as well, and now that's kind of stifling that 25% tariff. That's huge. You see their GDP get hurt, and the problem is when China gets hurt, we saw this in 2015. There was a huge devaluation of the yuan, and stock markets in the U.S. crashed very promptly. So far, we're seeing the U.S. market a little bit stronger than China. The S&P is down, what, 7% so far? Actually, a little bit more, 8 or 9% on the lows. China's down 30. Look at Europe. Europe's down 15%. Look at Japan. Japan's down 7%. Every market, Eurozone is down 14%. Every market globally is down except the United States. All right, emerging markets got hammered. Everything is getting hammered except the U.S. Two things are going to happen. All right, and this starts next week. U.S. is going to go down to new lows, or other markets globally are going to have to somehow rally. It's a lot harder for the second than the first. I see a rebound day today on the bullish side. I do not think the sell-off is over. All right, we could just be getting started. Be very careful. Earnings this week have provided us a boost, and it's allowed the United States to stay a little bit stronger than other markets. But one bad earnings report, one new development with Saudi Arabia in the U.S. U.S. laid sanctions on Saudi Arabia. Goodbye, S&P 500. We're tracking lower. There's greater risk right now that could affect the market than there is opportunity for it to go up. Be very careful. Institutional reports are coming out today, and we're going to look at that at Market Analysis Live, and we're going to answer the question: is the smart money getting into this market, or are they getting out? And that's going to be very important for how we trade next week. So I encourage you guys to check this out. If you sign up, you can be part of today's trading room and Market Analysis Live for 2 weeks, and the trading room for 2 weeks starting today for a money back guarantee. If you hate what you learn in the next 14 days, you get your money back. Now is the best time to join us, and we could celebrate your success next. You could be our next trade pro. Thanks for tuning in this week. Have a great week. Stay out of trouble, but don't get in too little trouble. A little bit's good, right, Vic? Victorio likes trouble. Get in trouble, guys. I'm not going to tell you that. Victorio endorses trouble. Go out there and have fun. Enjoy your 2 days off. We'll see you on Monday. Have a great day. Thanks for tuning in, guys. And I hope you had a great week. Take care. Manage your risk, trade the Trade Pro, and goodbye. Ciao. All right, Trade Pros in the room. Thanks, Marky. Let's get down to business. Everything looks like it's got a little bit of a bid to it. Oil just rallied off the open, 69.32 open on the pit session. Vicky, roll over your oil contract to December. Put Z on there. Z is perfect for Victorio because he just snoozes all the time. He's like, why did I come back? All right, Trade Pros, let me give you a few levels, and I'm going to show you where it makes sense to take our next best trades. We did a great job yesterday. A lot of team members were very successful. We caught that sell-off. Today, we need to find another level. Remember what level we talked about yesterday to the downside? What did we say, guys? Let me zoom out. We got that to the frickin' tick. It was actually almost scary good. And then the market reversed off that. So today, we're going to be looking for the same levels. I'm going to queue them up for you right now. And all you got to do is wait to get a trade. Your next best trade. Be patient. There's going to be opportunity. So let's get started.